There we go. Now we should be working. When in doubt, reboot the program. All right. Thanks for joining us again this week. I'm running through the Cramer list solo today because, Matthew's stuck in meetings. I mean, the guy works a lot. He does a lot in the market. He's managing several different ETFs, and boy, that guy gets more busy than, a one-legged man in a butt-kicking contest. All right, well, moving on. I'm gonna kick through Cramer's list by myself, and I've got my crew behind me here. We are live in our Discord channel with our members able to pipe in at any moment, so we might just throw some unrated fun at Jim Cramer today. Wanted to thank you guys again for your support. Thanks for clicking like and subscribe on our channel, and we really appreciate you telling your friends. We're actually growing this just a little bit. Our accuracy is horrifying. We're holding on to pretty much an average of 95% accurate on everything we pick off with price action analysis. And versus Cramer, it's pretty easy to beat Cramer with trading. He's not a trader; he's an investor. But in the short term, we get to go and find the optimal entries and exits to those investment ideas, and that's where we like to be able to help out both worlds of traders and investors. And then I'll throw a little spin on there and sometimes make some analysis ideas on how to trade as well. Sometimes I'll be able to give some insight as to being able to make income from long-term investment positions by selling options or trading debit spreads, credit spreads, all sorts of fun stuff, but you never know what you're going to get. But one way or another, you'll get a list of things you can look at for taking very accurate looks at price action to be able to get into or out of positions, as you will. So let's start with SPY a little bit, kind of give a little bit of an outlook for the week here. It's been nutty. I've got lots of dope on my chart, as you can see. We've got a lot of things happening with SPY here. One for sure is that this wolf wave was pretty indicative of finding the bear target for this pullback, not to mention the gap over here. Pretty easy to see, just look at the chart. But knowing what all liquidity zones within that price action are gives you trade ideas. And when you're day trading and swing trading SPY, it's nice to know when to get in and out. Yesterday, we pretty much reached outside of our broadening pattern that we've noted pretty well on this, and dipped right to a key point, bounced right up to our regression line and rejected and ate that entire candle. Opened with a half back on the open this morning, came back down to that base and found some buyers, and lo and behold, we're right in half of that candle. So the outlook on SPY here is consolidation for at least a couple days, and we will either break north or south very soon. We're in kind of a critical set of liquidity zones for support here. This is the big one down here around 493 to 492. You start crunching that, and it's going to be good news bears because we got one hell of a dip between here and the next shelf. We've got a halfway point right here, and then a mean reversion would be all the way down here to 472. Kind of crazy to think, but we've seen crazier. We've seen much crazier in the past. Big moves in that bear market series. So now we're looking for some volatility in this month of May. We're going to have some great trading opportunities in May. And where most people are saying sell in May and stay away, seasonality kind of points to that. We know better. We know there's going to be some volatility, and thus being able to take advantage of that volatility is what we're going to focus on. So looking for volatility is exactly that. We've got plenty of range to trade here, and we've got plenty of decisions to make should we start to go from one point to another. We get our decision-making time, if this, then that. If we start rejecting some of these liquidity levels, we may very well start to eat into a bearish trend here, and we've got a hell of a primary behind it. We're accumulated in a specific range. I think we'll probably have an answer by tomorrow or maybe early next week as to which way we're going to trend through the first couple weeks of May here. So stay tuned. We're going to definitely bring you some ideas on that. In the meantime, let's go pick over Cramer's stuff and start finding some ideas here. All right. He's saying buy a whole lot of stuff this week, and I'm a little nervous about that because we know there's some bear targets ahead. Let's start with how about Wingstop? He said buy that one, and of course we've basically coined a new candle um, name to look at. We're going to call it the Cramer bar. And if you look at a 2-hour chart, we got exactly that. He said buy this thing, and lo and behold, poof, liquidity were found, and damn if it didn't get ripped down with the market yesterday. Pretty easy one. We'll call that a Cramer bar in spite of it being an FOMC bar on the way back up. So Cramer said buy, and of course we see it all get eaten down. But we've defined a range. We've got the high and low. There's liquidity, and a midpoint. This morning we opened at the almost into the top of that bar, rejected the liquidity, came right down to a middle point, and bounced like a ball, baby. So this gave some great opportunities for traders. But would I enter it as an investor here? No. This is quite parabolic. We've had a 1.5 measured move. It's pretty obvious on this whole stand-up. We've accumulated. We've got a range break here. This is where we're seeing a big weekly doji here, and if this closes as a doji by tomorrow, look for half back on this bar. It'll be a pretty easy target. And if you're long term, this is where you're starting to be a little nervous about this trend reversing and giving half back, which would be a 250 move. Yeah, man, $100 down. I'd hate to be the guy long on that, but it happens. Let's look further left, though. This thing has been strong for a long time, but when it does have those pullbacks and it does have those accumulation patterns, it can go south in a hurry and give you half back. Pretty obvious. This has been parabolic for far too long to go without a pullback, and I think Cramer saying buy this might even be the trigger to give us a little bit of a short opportunity for a pullback. And maybe some patience to investors to say, hey, I'm going to wait for a pullback to give me a significant price level and a sign of continuation in this great bullish trend it's been in before I go long. So when Cramer says buy it here, yeah, I'd wait, be patient. Definitely be a little bit nervous about what's going on in the general market, and certainly recognize the range on this particular trade. So traders are going to be all over this. If you're an investor and you like to stay away from volatility, there's your sign. Stay away from that volatility. Wait your turn. It's coming. But for traders, yeah, we're loving this thing. Easy stock to trade. The next one he said to buy, let's see here, SKT, Tangier Incorporated. I have very little interest in most of these companies for what they do. I just look at the chart and trade it. This one's pretty obvious. We've got a broadening pattern breaking over at the top of a trend. It's already given us the return on this thing with a wick here. Gave us a nice 3-bar back up to the upper set of range on the weekly. On the daily, we got the Cramer bar, pretty obvious. It's a doji. It went right to regression on this channel and started bouncing back up. We may see a little bit of a short-term bull trend approach the angular resistance on this. Typically, a descending broadening pattern will do that. If it breaches this, we get a pretty easy measured move outside of it, and that gives us lots of range in this thing. So, so far, our Cramer bar did exactly that. Bounced right to the regression line, came up, and accumulated about the halfway point so far today. You got a scenario of one of two things happening here. Either you get a primary move here, and then an outside move would give you a target up here about $31 and some change, or you just accumulate in this range for a little while in between angular resistance and regression. Since we've only attempted that angular resistance 3 times so far, we've got a perfect 3-way channel here. Typically that's the case. We end up with a eventual break of angular resistance and a measured move outside, and possibly half or whole. So first target would be about 30, second target would be about 31 and some change, and plenty of range from the regression line break of 27 bucks. It gives you a couple dollars in a swing on this thing. For traders looking for a good time with this thing, investors still a bit choppy, still a bit parabolic, but this is where you're going to be looking for that continuation to break out and go higher for long term. So would I say it was an okay call on this one for investors? Sure, until I saw the monthly chart and realized, man, we're in exponent zone here. Nice 1.5 primary secondary move. be a little careful for your long-term investors on this particular one. We are above the first previous high. We're certainly not done with market structure, though. We've kind of seen this thing give some range, give that parabolic move. Capitalizations happened. Didn't really give us a long-term accumulation down here. Gave us more accumulation in the mid-range. I'm more prone to say this is likely to continue accumulating for a while before it either breaks back to half this trend or starts continuing higher. So from an investment standpoint, be patient on this thing. Yeah, it can break a little higher, but just certainly be able to resist jumping the gun on this thing as an investor. That's my opinion. Pretty much everything I say in this broadcast is an opinion. I'm just a trader. I read the chart, trade the chart. I do what I want with my money. Be sure and do some research and make your own decisions on what you do with your money. All right, moving on. He said buy KRE. Oh man, there is ever a reason for an inverse ETF. This is it, and Tuttle would be pretty happy about me saying SKRE is a thing. So when Cramer says go long KRE, we've got the Cramer bar. It's right there. Now we're accumulating. We gave half back. Look a little further left, guys. Yow, that can break over and give right back down to about 43.5 pretty easily. So careful with regional banking, man. I'm not so sure they're going to be overlooked by the big banks here, and they love cannibalizing these guys, and consolidating the sector is pretty much job number one for the big banks, and we can see that's happened multiple times. So be a little leery of going long on KRE here unless we break this range to the north and we start seeing it breach $50, and maybe we can continue higher. Can we get a primary and secondary on this thing? Yeah, maybe. I mean, we can certainly, see this outcome. Stack your range, bring it to the mean. Gives us an outside target to return to the previous high, but I wouldn't necessarily invest in this particular ETF. This is one where it's going to be a trader's zone, and let it break a range before you go and invest in this thing. But SKRE doesn't quite have the volume of KRE, but it's building, and it is leveraged 2x inverse regional banks. So if there was a buy signal, you'd be looking for it right around here, around the base here in this accumulation here. When I talked about this last, I was looking at exactly this. It bounced back down, gave half back, returned to the mean, and kind of bounced out of that. I might consider this as a way to hedge. If I did want to invest in KRE, I'd take a half or a quarter position into this as a hedge, just to kind of wait out a signal if I wanted to. Otherwise, that's what options are for. Options income strategies are kind of made for that. So moving on with this, I would be a little cautious with using this as an investment vehicle, but if Cramer is saying buy KRE, I might take notice of giving a quick bull trade on this thing, and leverage it is a couple dollar move is in order here. That's basically what we see. Next one he said, and this is another ETF. This is home building. So XHB. He said buy that. Well, let's go to the daily. We did get a bit of a Cramer bar here yesterday, but it was a big old inverted hammer, and it's right in an area of interest. So we have a primary already down from the top of the trend. We have a reversion target on this pivot here. You can look left and see the previous accumulation was there. This looks more like a bear flag to me for now, and the finishing move would be right down here to about 95.5. Yeah, you might get a good couple of trades out of this, but from an investment standpoint, I would wait for this range to break and kind of take insight to this right here. Let that break either north for buyers or south for sellers before you jump the gun on that. Don't chase Cramer into an investment like this. This is not a good one yet. Home builders are under pressure too. I've seen a lot of construction in my area, but it's not necessarily single family residences that are going up. It's a lot of dense, multifamily units going in more than anything. Home builders still get to take advantage of that, but not as much as they would from single family residents. It's just a different cost basis on that. This would be more of a market for a lot of people to buy rental properties in as far as multifamilies go. So I'm a little skeptical on whether home builders can keep up any kind of bullish momentum in this current market. Of course, we're not expecting any rate cuts anytime soon, probably later. That's going to have a huge effect on this. I would say we'd likely find an opportunity down here around 95 first. Just my opinion on that, but wait for this range to break. It'll give you a sign. Moving on. PayPal, I trade the crap out of. One of my favorite equities to trade lately. Both Bullish Bear Sig and I have been looking for going long term on this thing for a wheel trade strategy. Market structure's done its thing with this. It's accumulated to death and it followed the slope. This is kind of getting to a point where it's crossing a threshold. Accumulation and a breakout from 66 to 75 would give us the sign to invest in this thing and start looking for these weekly bars to revert half this trend. And there'll be a point here. You can see there's some accumulation here. I'm just going to borrow a couple of these pivots because I have too many of them on the chart anyway, and drag them on up to the obvious targets on this thing should it break out from here. So market structure's had its way with this thing. PayPal is still pretty popular. I still use it. I know a lot of people still use it, whether it's eBay or just general transactions. It's great for making lots of transactions, and well, there's volatility in it. Can we say Cramer's right on a buy here? Yeah, we got the Cramer bar to prove it wasn't necessarily a buy to go long yet, but this is pretty typical. You break resistance, you test support pretty regularly. We had a trend, gave half back here, trended again, and we're testing support again. So we're in a range around $65 to $70, and we're kind of floating in that support area. If it holds support here, cool. I can say, give Cramer some kudos and say, okay, you made a good decision to go long in this area generally. And market structure points to, yeah, we've got a pretty good potential to break and go into a range, but I would say trade this range first. Trader's going to be all over that. If it holds this support area around 65, 66 bucks, sure, it can be a long-term investment. I'd be looking at it from a income strategy point of view myself. So trade it as you will. Right now it's looking at it accumulation, and we eventually will like to see it trend out of this. So in the short term, we're going to be keeping an eye on this range here. We've got liquidity here, buyers here. We've got an intermediate zone here for, there'll be some sellers here. You'll see accumulation here likely if it does start to trend higher. And then, of course, there'll be some sellers up here. They sold the top of the Cramer bar. Pretty obvious. So look for sellers here. If we melt through them, we can trend. If we reject them, we trade. So for now, it's still a trader's chart on PayPal until proven otherwise, but it's got the potential to be a great long-term investment. So half a kudo to Cramer on this one, but the traders have it for now. Let's trade it. Moving forward, Okta. I like these guys, but I don't really like the chart. The gap says, I'm going to close down here for a mean reversion to some extent. And even though we wicked to the previous support area, we're still not done with this business area here. So let's look for traders to break this range before we get long into an investment mode on this thing. Weekly, again, market structure's done its thing. It accumulated, it's short squeezed, it came back down, tested support, it popped out. Very similar to PayPal here. We want to see this range break before we're investors. For now, we're traders. Looking for reversion targets. The 200 days pretty obvious, or 200 week is pretty obvious here, about 140. Sloping down though, so look for accumulation to maybe say an outside move to 135 is appropriate from this trend. And if you size up the weekly bar here, I mean, it kind of gives you that notion of, okay, a measured move would take us up to about 135 or so on the extension of across the top of that bar. But we always take and float these down to the mean and say, okay, well, traders have a primary target here about 120 first. So kind of look for a break. If you look at this range bar, it kind of matches that as a tone for target. Let it accumulate here for a while, let the traders have it. investors are going to be starting to look at this for a reversion, and sure, it can give a good annual return eventually. Like I said, I like the company. I just don't like the chart for longs yet, but I do like the trading action that is provided for it. So stack the move, of course, give us an opportunity to maybe close this gap. So bears are looking at shorting this a little bit for the short term, but the medium term and long term, pretty good outlook. So yeah, okay, I can give Cramer a little bit of credit for this one, but certainly trade it first. And the trader's going to be all over this until it breaches that range. So investors beware that there's going to be a more likely opportunity to pick it up a little cheaper than Cramer said. There's your Cramer bar. It's pretty obvious. I love that word. All right, moving down so we don't waste too much time. Next one here is next tracker, whatever the heck. He looked at this last week and said buy it. No, he didn't. He said sell this last week. I remember this one now. So we were looking at agreeing with him on that. We breached the critical support area. We started looking at this gap. Yeah, okay. Now I remember. He's saying buy it. Now he kind of flipped the script on it, it looks like. I think I remember him saying sell it last week. I'll have to go back and look at last week's video to confirm. But we're consolidating at a key area. Maybe we can get back into a mean reversion on this trend here and find this liquidity again. But for now, we're looking at a bear flag and possibly a short opportunity to take this to the next low. And that's kind of setting up right over here. I'm just going to draw a pivot instead of an LZ there, about 40 bucks. So bears are looking to short this a little bit lower in spite of this gap being closed already. We're looking for the rest of this move. And if you look even further left, give it a weekly chart. That's a market structure thing, guys. So it's kind of giving us that range. There would be your accumulation target for market structure anyway. If it holds there, cool, we can trend higher. But remember, it IPO'd down here around 30 bucks, so that's in the cards too if it melts that zone. Bears are all over this already. So I wouldn't give it a medium-term or a short-term buy signal unless it holds this support area and starts to trend up. But for an investor, I'm going to be patient and wait for that range to break before I go really long-term into this thing. Moving on, he also said buy Microsoft. We've seen the chips do their thing. There's your Cramer bar. Man, FOMC is great. So we're looking at key pivots, already obvious on this thing. There's the midpoint. Looking for danger zone here. If we breach this, we're going lower. Tech has certainly been beat up. We've already had our bullish days. We got a clean 1.5 measured move out of this thing just to the T. Now we're accumulating. Look for a reversion, possibly taking us to 370 if we breach the danger zone here, which is right here, about half of the previous move. We've killed the key pivot here at about the 395 zone. I'm going to say we may have, if we have some bearish momentum in May, we could reclaim 370 for Microsoft in the midterm here. For now, it's going to be watch for chop, watch for a lot of consolidation in range before a break. Traders are all over this. Investors would do better to be cautious on this thing. I know seasonality says sell in May and stay away. We're certainly going to see some volatility with some of the big seven here. Looking into our targets for short term, I mean, sure, we've got like 390, maybe holds to 380. Cool. Look for this pivot. If we hold the pivot, we can go back to the liquidity zone up here around 400 again and reject. Sure. That's about where that 50 period is on the 2-hour chart anyway. On the daily chart, it's way up here. So if we breach here, we'll likely hit here. If we reject here, we'll probably play this range for a while in volatility. And if we do come up with a nice bear flag here, a move would give us straight back a reversion between these two primary secondaries here, and puts us right back to the middle at about 370 again. So pretty obvious stuff on this. It's going to be, let's trade it from A to B and trade in a range first. Would I say this is a good buying point for an investor? Not yet. Let this settle. It's got to breach this before it gives a good long signal. And even then, you're looking for continuation of an already parabolic trend. And historically, we've seen those pull back significantly. So yeah, I would be a little skeptical about buying this to hold forever. here. I'd wait. There's going to be a better opportunity soon, likely. Same with Johnson and Johnson. You mentioned this one as a buy. There's your Cramer bar on a weekly even. Yeah, well, they're starting to sell it here. So this is our key zone. We see support down here, resistance here on a daily. Pretty obvious. I didn't need to draw those zones. They're there. All right, if you like, I'll draw them anyway. Look for supply up here. Oops, wrong one. And of course, look for demand down here. But I'm going to paint this one red because if we trip that area, we're in Barney Rebel trouble. So let's look at the monthly chart on this one. Breach here, there's your range bar, and a reversion trade would take us down to like 133. If you're going to be a long-term investor, you're going to have to wait patiently, probably a couple weeks for this to work out this range first before you go long. Certainly watch for traders to take a quick bear position on this, and they have already today. Looking at the 2-hour chart, that was a great short. Give half back on the Cramer range, we'll call it, and look for support maybe for a quick scalp either north or south, right around 148.50. And we could see this thing be a swing trade short down here to 144, 145, or if it holds here, of course, back to range. It can do either. As a investor, yeah, you're being capitalized here by the Cramer excitement here chasing this thing. So that's where the sellers were, right in that demand zone or supply zone. I'm not going to call it a supply zone until it confirms, but for now it's a liquidity zone and it's noted. Take it down here, let the bears do their thing, and we might see an opportunity to swing this back up. But meantime, I'm going to say investors should wait patiently for this one. Traders already have it in their midst. They're trading the crap out of this thing. Easy 15-minute target. You see the bar here. It'll likely hit this zone here. You can pretty much range these on any time frame and plot them out. Bears have it there. So trade it. This is definitely I would rather trade it, but I would say Cramer got a half a kudo until it hit this zone, and then now it's going to give us better opportunities. So wait patiently. Goldman Sachs, still bullish as hell. We're looking, last week we were printing out this angular. We're in a range of a massive measured move setup. I mean, the monthly chart is where you got to look for this thing. All right, so that's set up. We're above the mean. We're above the halfway point. We're likely to finish crawling all the way up to like 485 on this thing. Goldman Sachs is doing very well, cannibalizing all the regional banks is kind of what they're doing. And shorter term on a weekly chart, you can spot it pretty easy here. There's your primary, secondary takes us right to our goal. It's going, guys. Okay, Cramer said buy it. I'll give him a kudo for this one, but be patient because there's a weekly doji likely to happen here. And when we see those, we may get a pullback to about 409, 410, and then maybe some continuation. So yeah, we'll give them the benefit of the doubt. Kudos. Okay, investors take it here, but be careful. It might pull back and give you a better deal on price. Instead of paying 430, you might get it around 410, 409, 410, somewhere in that area. Probably likely first. And, traders love this sort of stuff. So if you're a long-term investor and you already bought this and you bought good at that 409, 410 area, you might consider a couple of covered calls here, maybe the 445 strike, and collect some income for a week or two before this thing returns to mean. Certainly some opportunities to trade it. I think I like it long term. Sure, it's a great investment. Goldman Sachs kicks ass most of the time, but look at this volatility. I mean, it gives you some pretty big moves. So, an investment standpoint, yes, got a long term goal on it. Trader standpoint, yes, you've got some opportunities to trade from different ranges here. And income strategy traders, long term investors, yes, you've got advantages here to be had in this thing for sure. It is very strong. But for short term, I would look for a little bit more volatility to keep it in a range and give you better opportunities. Just my opinion. Looking at the 2-hour chart, we've got a couple of consolidation waves in effect here. We're going to probably see this start to wedge out, and I'm thinking I'm going to draw that right now for you. Probably a wedge like this would be appropriate, and we'll see it come to a point probably by the end of tomorrow, and maybe into Monday we'll see either a break south to revert some of this or a break north to continue on grinding up this trend. In fact, we could take this back here and even find a better angle. Yeah, that makes more sense, right? So anyway, traders have this for now, but long term, yeah, I give them a kudo on this one, but I think you'll probably see some better opportunities to buy a little cheaper than Cramer said to buy it. Let's see here. DuPont. Good Lord. Marcidi, if there was ever a dog of the Dow, DuPont and 3M are kind of the go-tos for the best dogs. All right. Market structure did its thing. It's accumulated. DuPont's been around forever, guys. We've seen market structure rinse and repeat this thing forever, but look at the swings and volatility in this company since 97. All right. Now we've got some serious things going on in this thing. We've, of course, got this massive drop here on the monthly. We can see the monthly 200 up here around 95 bucks. Yeah, I like that as a target for long-term investors, but for traders, we're all over this thing first. Let's have a look at the weekly. Got a primary setup. We got a range accumulation. We're probably likely to break north from this overall, and I would say medium term, short term target would be about 90 bucks. Extension to 95 and 97 is likely eventually. Let's plot out the short term though. Let's go to the daily. Let me just hit the chart reset button. There we go. So we've got this nice 1-2 here. We got a nice primary, secondary measured move. We've given pretty much half back on that thing right to the daily 200 and bounced. Now we're extended a bit again. We're setting up a 1-2 out of this range here for a bullish measured move, but let it accumulate in this range first before we get that continuation. And then in the 2-hour, you'll see what I mean. There are some big bars here, including some Cramer bars, and you know there's going to be some sellers here at this upper range. So let's plot a couple of 2-hour range points of interest here. You've got some supply here to deal with, and you've got some demand here, and then you've got a possibility of a reversion back down here, but I don't think that's as likely. So let's find the liquidity right there. Yeah, let me stretch these out a little bit further. Probably in the next week you'll see some good opportunities to trade it, and then you're going to be looking for better opportunities for an investor, and you're going to see some tremendous opportunities for traders and option sellers alike. Look at this range. Pretty easy. If we hold here, we'll breach here, run for our measured move. Okay. But in the meantime, we're going to accumulate. I think probably by Monday we'll see either a breach of support here and run back down to this liquidity zone, or a breach of resistance here and a run for our measured move. So this is a pretty good dog of the Dow. Let's run it. I think we got some good trades on this thing. Giving Cramer kudos. Okay, it's a good buy from that standpoint, but wait for this range to break out first before you get too excited on that. So we'll give him a half a kudo. We'll give credit when credit's due. Why not? Shorter term, 15-minute chart. It's made a standard move from the Cramer bar. Looking for possible breach down here to the support area, of course. I'm going to look for buyers probably around that $77 range and let it do its thing. If we hold that area, I like it as a good range trade. And again, if we break out for the investors, long term looks good. Pardon me a second. It's allergy season and my throat gets pretty dry when I'm talking for a while. So bear with me. I might have to mute the mic and gag for a minute. All right, next thing here. Dell Technologies, man. Us geeks who play with computers, we know Dell. They're good at building computers. Investors, beware. We're parabolic, man, and there's a hell of a gap south of this range. So Cramer said buy. That might be the kiss of death. So let's be aware that things can change right in this area. So just look at this volatility in the past. It gets capitalized quick on a reversal. So I might say shame on you, Cramer, for saying buy this thing here. It's a bit high. Wait for this range to break before you give that signal. We can already see the wedge forming. We're at the reversion line on that, good grief. We've seen it. Damn, word slips my mind. But we've seen the range in this wedge getting tighter and tighter. We're at the regression line. That's the word I was looking for, regression. We've come up from the bottom here. There's your Cramer bar. Let's see if this accumulates in this range and holds support and continues to go higher. We know where the critical range is on this thing. That wedge is pretty easy to spot. Daily chart gave it to us with this wick here. Be cautious if you're going to buy this here. Wait for this to break first. It's going to happen probably within this end of May here. And this is going to be a trader stock for a while first. But if this thing breaks into this failure of a bull flag, dude, that is one hell of a bearish gap to run down to 92 bucks. So I wouldn't say buy this thing and be pounding the table on that, and you might get a bunch of people into a bad position here. I know he has his own disclaimer to say this is my opinion and I'm not giving investment advice or financial advice. I would agree with him on that. That's my same credo we got to follow. Those are rules. But dude, be careful here if you're going to try and chase Cramer into a long position on this. That's all I can say. Traders, hell yeah, we got this. Easy price action. Lots of mean reversion trades to be happening here. A few days later, we could see this thing break going into a point of towards the end of May here. That's where we're going to see the decisions on investors. Capitalization is definitely something people do with this particular equity, so be aware of that. Costco, giving kudos on that Cramer bar. Good reach right into our liquidity zone. We still have a little bit of resistance ahead to look forward to. Let me go ahead and plot the daily chart out. We've got a supply zone that's huge right up in this area. So Costco, we're looking for a move short term, medium term to about 742. We're looking at a breach of this range. Be aware this is critical support down here. So if it rejects here and starts to break this, we might get a short down here. But for now, we'll give Cramer a pat on the back and say, good job, man. You called a good buy. Costco's always kind of a good buy. I mean, they know how to make money. Probably one of the best retail / grocer industries out there. They do a lot of business, man. So look for the supply zone here short term to breach, and if we continue higher, we've got another supply zone up here. Good bull targets on the outside on this thing. Looking pretty good. Damn, allergies are killing me. Let's go into the next one, Amazon. Of course, same scenario, only now we're looking for volatility. We got a midpoint supply down here, or demand down here, supply up here. Daily charts playing out for some more volatility to come. Long term, the time to buy this would have been better off down in October and January. Now we're looking for some capitalization to take place, so profit taking, and we're reaching those all-time highs anyway. Look for some consolidation in this range. Maybe we continue to break out. It's a good, strong company for sure. But this is kind of a zone where I'd rather be trading it than investing in it. And we're starting to come to a point on this 2-hour pennant here. So be aware that Amazon's going to see some fluctuations before it becomes a good investment. Allergies are killing me, guys. Sorry. Google. That was another one. You said buy. Yeah, there's your Cramer bar. Way up on the top tick. Coming back into range here, we could see a bearish opportunity here to come back to the mean here. 157 is the number for bears to hit. Plenty of gap to fill there. Earnings just happened though. We know that earnings tend to come and get overshot and then settle in the middle somewhere, kind of where we're at now. We're looking for accumulation and eventually we'll get a break. Here it is. If this thing starts to slope back out of this liquidity zone and give us the old cup and handle, cool. Good stuff here. We got targets for bulls at 173 and 176 respectively. We've already given half of the earnings bar back. Would I say buy it here yesterday? No, I would wait for this range to break. I'm a trader before I'm an investor. And we could see this thing fail and come back down and eat the entire bar. We've got the range on this thing. It's pretty much night and day. Let it settle for a few more days before you decide to just go long on this thing. It's going to be a trader stock first. And can we breach and can we get the handle or the cup out of this thing? Sure, we can come up to 175 again pretty soon. When it gets there, though, look for more profit taking, and then we'll either get a continuation pattern or a failed cup and handle, and a bear target is the bottom of the earnings bar. Cramer bar, obviously smaller than the earnings bar. We know what to do with it. At the time this thing was going into earnings, we were able to make some pretty decent trades on this as well as Meta and a couple others. Now we're capitalizing. We've made our money. We're going to wait for this to shake out before we invest in it long. But for the meantime, traders are all over this. Trade it first. Yeah, look for accumulation. We make it the rounding bottom here for a cup. But we can also go with a bear flag and breach, fail to cup, and run down to that low again. Pretty easy shot. Going into Cramer said sell. He only said sell two things. God, I love that guy. MTTR. Yeah, sure. We got a hell of a gap we can hit. No problem. This thing is psycho. But look at the market structure. We've done our thing. Now we're into a short squeeze. We had a good earnings call. All right. Gap to fill is evident. Pretty easy, right? Wait for the range to break before you go and sell or buy something. And if Cramer says something about it, just note that it's going to have even more volatility than just a basic price analysis. And we've got some key points to look at here. Let's drill down. So, massive gap. Dude, that was probably an earnings leak or something, short squeeze, whatever, dude. The shorts were done with this thing. Market structure has finally done its thing. It found critical support. Got a great earnings call anyway. And now we're looking for reversion of this big range bar here. Let's drill down into a 2 hour. God, that thing's massive. Look left, always look left. There were buyers here. There were sellers here. And Cramer saying sell it. We know what that does. Usually it gathers liquidity, it gives it all to the institutions, and then the retail gets left behind. So wait for this range to break before you decide what to do with it as an investor. Don't necessarily buy or sell. If you were long in this thing and you're looking to capitalize from it, okay. If you were an investor back here during market structure accumulation, you did very well. It's a penny stock after all. In this range, this pennant will eventually break, and you can clearly see that's a pennant, a big old bull flag, right? Do not simply sell a bull flag. They do have the 60-40 rule, but let the range break first. Trade it on a day trading analysis first. About 442 is a key pivot right between the two zones here. You've got supply here, demand here, pretty obvious. In the meantime, it's good and volatile. It's a penny stock I'd love to trade. I love trading penny stocks, but look at this. Primary move, reversion trade, reversion trade. Secondary move would breach this supply zone and run for our mid zone. So bears have it for now. Okay, Cramer, I'll give you some short-term kudos on sell it. If you had told people in the past to buy this thing when it was down there at about $1, yeah, you did great. You're capitalizing now. But be aware that traders are going to try to take this thing, and if institutions are interested in this thing at all, This is where they're going to be looking for liquidity, and they all know it's right here. So if people are selling into this, pretty sure there's going to be some buying if there's interest in this company for long-term return. It's going to be there, and this is where market structure does its thing. We've had our primary squeeze. We accumulated. There's a squeeze, squeeze, here a squeeze, there a squeeze, everywhere a squeeze, squeeze. All right, this is the final one where things accumulate, and it'll either hold range and continue higher, or it will breach and come back for a mean reversion. So a mean reversion target is here. We'll make that red, and this one will be yellow. So take caution of a short position or bearish position happening around this range. And if this gets breached, we'll trade from one to the other. Around here is where the buyers are going to be, and if they fail to show up here, sure, we'll close the gap. We'll go back to a buck or two. But in the meantime, if you're going to sell this as a short, be aware that liquidity gets eaten. And man, that's where I'd be looking if I was an institutional trader. And when you get to those capital levels, you would be too. So would you invest long term in a penny stock? Not necessarily, but everybody kicks themselves when they say, oh, I missed Amazon. I want the next Amazon. I don't know what this company even does. Could they be the next Amazon? Who the hell knows? But it's a good trading stock, and maybe it'll be a good long-term investment stock. If it had an options chain, great for learning to wheel trade on because it's got lots of range, lots of volatility. You can have this thing at a zero cost in a heartbeat if you're an option seller, and it has, I don't even know if it has options liquidity. I haven't looked yet. Yeah, if Cramer's saying sell it, well, be aware that there's going to be a liquidity grab, and we'll see which way it goes. For now, traders have it. Okay, give them a kudo for selling if it's the profit situation. Give them a kudo for selling if it's a get out of the way situation. I don't know if a caller's called up and asked him about it. Maybe he said sell it there. Who knows? I don't watch the show. That's Tuttle's job. He did say sell forward. I'll give him some kudos on that short term. I already had that plan. Pretty easy angular resistance here. Where did I find that monthly chart? There it is. Obvious one. Captain Obvious says sell forward. They've got some troubles in the company. Fundamentally, yeah, they lost money on all their electric trucks or whatever. Big deal. We know the liquidity is pretty easy on this one. Let's go into a 2-hour chart and find the range though. Oh, that's pretty obvious. Looking for a reversion trade. So bulls are buying this right now and looking for a trade back to the mean. Those reversion trades are pretty easy. So bulls are looking to go here back to about 1260, 1270. But the Cramer sell it bar, yeah, they got bought. So be careful of this range, and sellers are up here. Pretty easy. Even shorter term, there were some sellers on this bullish move from the open. But Cramer said sell it here. So I'm going to say half of a shame on you and half of a okay, you did well if you were long on that other move. But you'd have to be holding this for a long time on this stuff, and then to say sell here, no, don't do that. Wait for this thing to accumulate. If you're an options trader or you're selling options on forward, you're going to do fine. Just keep making that income. Big company takes a lot of money to move. Just because they lost money on their electric vehicle side of things doesn't mean they're not making a killing worldwide on their petrol-powered vehicles. Just trade it. Don't go and take a word from Cramer to say sell it and stay out of the damn thing. It's a good investment stock for long-term holders. It has been. As much as coming from a mechanical background, Ford's paid my bills and the amount of work they provided me from just basic failures. But you got to realize there's a lot of them on the road. Primary income from a mechanic's point of view is, yeah, they're paying to work on. Yeah, they have some prone to fail. But for every 10 cars you work on in the shop that say Ford on them, 1 million cars are still rolling without any major problems. So understand that. They've got a lot more cars on the road than most people, and that's globally, not just locally. So long-term company, yeah, dude, investors love this thing. Long-term, it pays a decent amount of dividend to hold it. It's a pretty decent company overall, but traders know what to do with it too. So, I love selling options on this thing or using it as an options trading platform. The strikes have been really weird on it though. They've got these weird $12.83 strikes or whatever the hell they are. I don't like it for an options trading platform anymore, but you can still make income selling options on this thing as a long-term investor anyway. So that's where we're at with it. Pretty much done with the list. That was the last thing he said to sell. Just 2 things on the sell list and a whole ton of buyers. And man, we're looking at volatility. May is just going to be volatile. It's going to be a trader's month, and we're all over it. So check us out at thebullishbears.com. Our monthly membership fees are pretty dang low. We're keeping them that way compared to everybody else. We're like the bottom dollar in the book, but we don't make money selling a service. The moderators in our group make money trading. That's where we make our living. So we don't need to make killer money selling a service. We just do that to keep the lights on. It runs itself and powers itself in that respect from that revenue stream. The only reason we would even charge for a membership is so that we can keep the lights on. In the long term, our CEO is looking, eventually he'd love to turn this into a free service for everyone and maybe even operate it as a 501c for all we care. Our focus isn't making money on the service. Our focus is making money as traders and being able to pay it forward and teach others. This keeps the lights on. So that's what our membership does. And we're going to keep it as low as we possibly can forever. That's our plan, and unless we turn into a charity. So anyway, or a nonprofit. Sorry, not charity, nonprofit.
Why don't you sell stock against the company? I mean, really?
We should be publicly traded, man. And you know, we might end up there. What's to say we couldn't
do it for you?
Yeah, we could build an ETF from this company. You know, that'd be a great idea. Who knows? We'll see where we go. Why not be a exchange traded fund? I mean, with a 95% average accuracy rating on this weekly thing we're doing here, dude, that'd be a no-brainer to be an ETF. Come to think of it. Thanks for the idea. All right, we're going to start talking to Matthew about that later next week when he's out of the busy meetings he's been to. I think we'll maybe have that conversation. Bullish Bears ETF. I could see that. That'd be cool. Anyway, thanks again for joining us, guys. Tell your friends. Thanks for liking and subscribing. We do appreciate your attention, and we love being able to pay it forward and provide trading opportunities and technical analysis. It's what we do. So anytime you guys have a ticker you want us to look at, feel free to shoot us a comment on this video or any of our other videos. We're happy to look. We love doing technical analysis. If there's something you would want to call Cramer and ask him about, call us first. We'll give you the better answer. Thanks again, guys. Have a wonderful week.